Good morning, happy Monday to you, and thanks so much for tuning in to Buy Now, Sell Now on ET Now. I'm Alex Matthew, and with me is Karunya Rao. At the start of today's show, I'd like to wish both Karunya and all the women joining in today a very happy Women's Day. It gives us the opportunity today, of course, to wish you that, but hopefully that is something that pans out all the days of the year, the respect and the honor that you get today. We've got a special show lined up for you. Let me first, Karunya, take our viewers through the markets and how they are looking at the start of this hour of trade. Of course, we've been trading for a couple of hours. We've seen a bit of a tapering off from the high point of the day. We've started quite well, in fact, looking quite promising, in line with the cues that we've gotten from overseas. Of course, in the US, that $1.9 trillion fiscal package is looking or rather very likely to come in this week, and that's sort of brought risk on trade back into the fold. Like I said, we're off the day's highs, but you have the broader markets that are keeping pace with the benchmark indices. The market breadth is looking quite good even as we stand right now. Among the sectoral indices, the PSU banks are looking quite strong, and so is the metals pack, and we have the IT pack that's also doing quite well. Crude is in focus, remember, because of the attacks that took place over the weekend on Saudi Arabia's oil facilities. Brent crude trading above $70 to the barrel. But we've got Nikunj Dalmia, the managing editor at ET Now, who's setting you up for the for the week's trade in the editor's take. So listen to what he had to say.
Some would argue that we perhaps are at a turning point, and the reason why we are at a turning point is because globally the low interest rate trade is getting challenged, which means the basic assumption for 2021 was interest rates will remain low and they will remain low for a long period of time. But since bond yields have started moving higher, it is leading to some amount of price adjustment. Also, the spike in crude is something you really need to be watchful of. So on the macro front, the pitch for equities, which in a sense looked extremely powerful, now is getting challenged. But meanwhile, what we are also experiencing is that the macros are getting challenging, but the micros are looking better. And typically when micros are looking better, the small and the mid-cap stocks, they always outperform. So for me, this in a sense has been the highlight of the market, at least in the post-budget period, where the confidence to buy into small and mid-cap stocks is only multiplying. And that is a factor which we need to monitor. I expect that irrespective of what is happening at a macro level, the idea to buy individual stocks is going to be decent. So gone are those days where you looked at the market you made a market view and when you bought a stock. Now it's about you make a stock view irrespective of what is happening in the market. The market will only give you entry points. So if you buy a good stock in a bad market, you will make money. But if you buy a bad stock in a good market, you're unlikely to make money. India, in a sense, is completely outperforming. I think it is visible in the way how world is contracting and we've managed to do well. Why is India outperforming? Growth, earnings, valuations, and there is definitely an optimism which is now coming on the corporate front. FI long positions are the lowest in last 56 months. Now you can look at it negatively and say, okay, the long positions are not there, which means FIs are not in a mood to buy. But if the macros improve and if things stabilize at a global level, this number, which now stands at 56%, I'll underline it again, also means that the headroom for them to buy could increase. So it's a glass half full, glass half empty theory. And for me, this again in a sense is also a very important number, since we track flows on a very meaningful manner, which is $20 billion. It is not exceptionally strong, but it is very powerful to tell you that foreign institutional investors, irrespective of what is happening to yields, crude, valuations, they continue to buy. So I think it's be too naive to assume that the great Indian bull market is over. But yes, like I said, individual stocks will make outperformance. This for me, I think, is again the most important aspect which you need to monitor.
All right, well, very pertinent points being made there, but let's take a look at some of the individual stocks that are making the news and as a result of which are active in trade today. We've got BEML that's absolutely roaring because Tata Motors, Mahindra and Ashok Leyland are looking to buy a 26% stake. You've got Adani Ports that has approved fundraising plan of 800 crore rupees via preferential issue. Indian Bank, another bank that is doing quite well for itself. There's an in-principle approval for partial or full divestment of the bank's stake in its joint venture ASREC. There's Concord, which is forayed into container manufacturing to lessen the reliance on Chinese imports. Aarti Drugs doing quite well as well in trade today. Aarti Specialty Chemicals receives the approval under the PLI scheme for the pharma sector. Natco Pharma has received final approval for Everolimus tablets in the US markets. Just Dial in focus. Tata Digital in talks with Just Dial for a stake buy, according to an Economic Times report. ONGC again in focus. JP Morgan has maintained an overweight rating on the stock, and once again, because of the crude oil spike, it is in it's in the center of trade today. Of course, Motherson Sumi, one of the auto makers, of course, the largest one, is in focus. CLSA has maintained a buy and see reorganization to be 2.5 to 5% of EPS accretion, or leading to EPS accretion for minority shareholders going forward. Oberoi Realty, CLSA has recommended a switch from Godrej Properties, which it has a sell rating on now, to Oberoi, which it has an outperform rating. All right, well, that's essentially how we're looking at in terms of the individual stocks. We've got a couple of guests joining in, regulars in fact. Kunal Bothra is joining in, as well as Sharmila Joshi. If we have Kunal, thank you so much for joining us today. What are your initial views on where you see the markets and how they've started for the week? And what are your individual calls today, the high risk and low risk strategies?
So good morning, Alex. So I think the market texture is a bit wobbly today because, frankly, after what transpired across the globe over the last week, there was probably some feeling that the markets could open on a softer note, even though the US markets closed stronger on Friday. But because of the I would say residual correction which the markets had shown previous week, I was expecting some the volatility to come back again. India VIX has also managed to jump back last week as well. So on the backdrop of it, I was expecting some volatility in the indices today. Also, I think the first half an hour, first 1 hour or so, the Bank Nifty was doing pretty well for itself, up more than 500 points. But I think just a matter of flattish to negative kind of territory. So I believe that this is likely going to be the texture for the markets, even for the next couple of days. You might see the index still struggling to find any kind of direction. 15,000 plus or minus 200 to 50 points is broadly the range for Nifty as well. And I believe that that's likely going to be the texture. And I think, as Nikunj also pointed out in his in the editor's take, I think that the action is going to be more stock specific. So I completely agree with that. That the action is going to be more stock specific, especially towards the names of stocks which are in the thick of news flow. Now, I would recommend a couple of buy calls, expecting that the stock specific activity would continue for individual names. One of the stock apparently on the large cap front, which has been doing exceptionally well for itself, and surprisingly that it's gaining a decent traction, is Reliance Industries. Now the stock in the last 1 week has recovered almost 200 rupees from its lows of 2050 levels, and it's looking stronger because it tends to find more resilient when the markets are going into a bit of a volatile kind of a price action. So I would expect Reliance Industries to do pretty well for itself. Targets of 2,350. So I think there's some error with the target, but it's 2,350 as a target for Reliance Industries. Stop us at 2,150. And the second one which I'm suggesting as a buy is on mobile. Now it's interesting because the stock 2 weeks back was almost at 130, 132. From there it corrected back towards 100 odd levels. It's come back to two important support zones. One on the price front of psychological mark of 100, and the other is some very strong moving average supports as well. So I would expect a stronger reversal on the upside for automobile from current levels, suggesting a buy with a positional target of 120, and stop loss could be kept at 95 levels.
All right, Kunal, thanks for those ideas. I'm going to go across to Sharmila now. Sharmila, happy Women's Day to you at the onset, and thanks so much for joining in. Good morning. What are your high risk and low risk ideas for us?
Good morning, Alex, and thank you. And wish all the women out there very happy Women's Day. So coming to the ideas, high risk, I'm going with TVS Motors, not really for any reason except the fact that a lot of the recovery that we have seen in the two-wheeler space has sort of, valuations have caught up with that. So, the strong growth that TVS Motors has shown so far, that needs to sustain in the coming months, and in all likelihood it will. Within the auto space, between passenger vehicles and two-wheelers, I definitely prefer two-wheelers as a place, simply because I think the rural demand is going to sustain longer than what we've seen in passenger vehicles, which is why TVS Motors. Coming to the low risk, I think this is a theme that I have spoken about many times. I think the two sort of themes that I think will do well going forward are IT and pharma. Because they're, pharma was of course supported by low valuations also, and the fact that they are now coming into their own in terms of earnings. And for IT, we've seen that really earnings have been the strong pitch for them going ahead as well. So within the pharma space today, I've gone with Dr. Reddy's. This is a stock that has been really reporting a very good set of numbers, and their strong product pipeline seems to suggest that this strong trajectory is likely to continue. So this is a stock that I think has a substantial upside from current levels. So my two stocks for the day are TVS Motors and Dr. Reddy's.
All right, Sharmila. Well, viewers, those are Sharmila's picks for you today, but we've been speaking to inspirational women all day today as part of our coverage on International Women's Day. And one of those people that we spoke to is a pioneer in the food segment in India. We're talking about Mrs. Rajni Bector. And as you would probably have heard recently, of course, her firm was listed on the bourses, and she's had quite the story, quite the inspirational story. Listen in to this conversation that we had with her.
It was a period of, I started in 1978. And in 1978, it was a small city like Ludhiana. There was, the ladies were good families from not really used to go and to work anywhere. So there was so much of criticism and rejections from everybody, why you are doing it, why, what for you are doing it. But by passion, really, with my husband's help, he just supported me. Just do whatever you feel like. Just go ahead with everything. So that was the main thing which really gave me the feeling of going ahead with everything. That is the main thing.
All right, request both our guests to stay with us. We'll be back with a lot more on the other side of this very short break. Welcome back. You're watching Buy Now, Sell Now on ET Now, and it's time for us to take the queries that you've sent to us. And in fact, we're starting with quite the interesting one. Right on top, we've got Peter Richards, who's written to us on Twitter, and he's asking whether he should buy Infosys. And that's an interesting question. IT-Pac, as I mentioned earlier, is doing, well, not too bad for itself, gaining about 1% for the pack as a whole. But Kunal, coming to you specifically on Infosys, what are the charts telling you? Should you buy at this point?
I think it's a good suggestion. I mean, it's a good stock to look at, because frankly, at current levels of 1330, the short-term downside for support for Infosys looks to be quite strong. So what has been happening is that many of these IT stocks, they are going through a bit of a range-bound action or consolidation, to be more precise. And I think on that backdrop, I think stocks like Infosys could offer a good buying opportunity. Now, I was just looking at the very, very short-term charts, and purely from the intraday kind of a time frame, and the stock of Infosys is actually forming a bullish flag pattern. So even though it's a very short-term oriented time frame, but it still indicates that there is a possibility that the stock can break out of this short-term formation and look to move up higher. If that happens, then I believe stock like Infosys can come back to its breaking its all-time high levels approximately at 1360, 1370 mark. So I think even if it's a short-term trade, I'm not sure of the exact time frame, but even if it's a short-term trade which you're looking at, I think buying Infosys at current levels could be a good prospect. But even if you're looking at it from a longer-term view, I think you should use these opportunities of time correction or price correction to add on to the IT stocks. If you're looking to buy maybe a couple of other names, then I would suggest look at Wipro as well at current levels. I think from a longer-term play specifically, I think the stock looks fairly attractive and could give you very handsome returns, provided if your time frame is at least 2 years or plus.
All right. So it's a buy call from Kunal on Infosys, and in fact, you can also consider Wipro as what he's saying for the long-term time horizon. But I want to come to you on the fundamentals, just very quickly, Sharmila. What is your view on Infosys, and would you say that it's a good idea to buy at this point?
Yes, I think so, and I think I would agree that you need to keep your investment horizon slightly longer. And I think another thing that you need to remember when you look at the valuations at this point in time is that we are in the last quarter. So I think within a month, everybody is going to flip to FY22 kind of valuations. And from that perspective, Infosys is trading at a very fair value. But as I said, you need to keep your investment horizons like in that 12 to 18 month kind of a zone. And then, yes, I think you can definitely buy Infosys.
Yes. Yeah. All right. Let's go to the second query then. We've got Shyam Karani who's got a question on paint companies, which I think is quite the interesting one. But first on the technicals, he's given us various options, Kunal. It's across the board. So he's talking about all of the available options. Which would you suggest is looking strongest on the charts though?
Strongest on the charts, even after a correction of more than 15 to 20%, as Asian Paints. So at 2,400 levels, I think Asian Paints looks fairly attractive. It's coming out of a correction. It's available at a decent support price. It's still above its long-term averages. So technically, chartically, and price-wise, as well as indicator-wise, I think there are a lot of positives to take away for a stock like Asian Paints, provided if your time horizon is longer term, or at least with 1 year plus kind of a time horizon. And I think there should be a good enough money which could be made on Asian Paints, even from buying at current levels of 2,400. So I think I would place an upside target of almost 2,750 to 2,800 with a time horizon of at least approximately 1 year on Asian Paints.
All right. Sharmila, seemingly the housing segment, from what we've heard over the last several weeks, is buzzing, right? And I've at least seen anecdotal evidence of a lot of activity taking place in that space. Yet the concern right now, I think, would be crude oil prices and the fact that they've risen so sharply, so quickly. Is that something that is going to weigh on your decision right now to get in at this point into one of the paint companies? If so, what would that paint company be if you had to pick?
I think this is a very interesting basket to start with, because I think most of the names within this space look very good to me. Because within the sort of paint sector, they're sort of catering to different kind of segments. Some could be more decorative, some could be more industrial, etc. Yes, I think the negative has been that crude prices have gone up and that will affect their margins. But I think the demand picture is something that we need to look at now, and that seems to be fairly strong. So in fact, I've gone with two names within this space. One is Bajaj Paints, simply because, as I was saying, here we see that the demand from both the rural and semi-urban sort of areas has been very good, and that has reflected in their numbers. And their industrial segment, which is because of the fact that we are selling more cars, etc., that has also done well. So I think Bajaj Paints is definitely one stock to look at. And the other, I completely agree with Kunal. I think Asian Paints would be the other stock. Because this is the leader in the segment, and it does get a premium valuation for a reason, and that's a reason that you should be looking at that. And here again, I think the demand picture, the kind of numbers they've reported, they all sort of made the case for investment in Asian Paints stronger. And again, I think I would agree with Kunal that your investment horizon needs to be at least 12 months at this point in time. So I'm going with two stocks, Bajaj Paints and Asian Paints.
Okay, there you have it, our expert recommendation on paint stocks and the ones they prefer. Moving on to query number 3, Dilip Rao has tweeted to us. He's been holding on to Dalmia Sugar for the last 3 years. His buying price was 173 rupees, and he wants our expert's opinion whether to exit or to wait patiently for a little while longer. Kunal, 3 years on, once again back to those 170 odd levels. What would be your call?
I think after quite some time, Dalmia Sugar and many of the sugar stocks have come back to their yearly high. So it's a good factor to look at. I was actually looking at the longer term charts for many of the sugar stocks over the weekend, and I think Balrampur Chini, of course, stands out to be the leader as such in the pack, because it was one of the few stocks to give that 10-year breakout. So I think Dalmia Sugar as well, if I'm not wrong, 2015-16 the stock was available at 170 odd rupees, and in 2007 as well the stock had a high of closer to 160, 170. So it's been almost 10 years, 10 to 12 years that the stock has been in a range. I think the sugar stocks in the sugar sector overall is more cyclical. So whenever it goes through those structural and 10 years, 5 years kind of a breakout, it tends to go into a multi-year upside. So looking at the charts for overall sugar stocks, I would believe that these stocks have just broken out of their 10-year range, and there should be a longer-term uptrend for these stocks, even from current levels. But I still believe that going with the leader in the pack, or at least in terms of price performance, would be a much better approach. So you can hold on to Dalmia Sugar, but if you're looking to add on to some other stocks, assumingly from the same space, then I would recommend Balrampur Chini, even at current levels.
All right. Sharmila, do you concur with Kunal's view, or do you have any alternate advice for our viewer?
No, I think we're discussing this is a very cyclical sort of a sector, and I think most commodity stocks follow very well-defined cycles, and the valuations also follow a certain P band. And if you look at sugar stocks, if you look at Dalmia Sugar in particular, it is in very much at the lower end of that valuation band that sugar stocks normally trade at. So, from that perspective, I'm very comfortable with holding Dalmia Sugar at this valuation, at this price, because, the valuations give me that comfort. And as you all were discussing, I think there is enough evidence in the way sugar prices are moving globally and the kind of demand picture that we are seeing domestically, that this is a good story to be in at this point in time. So I think since he's held on to it for so many years, there is no harm in holding on to it for another 6 to 12 months.
Okay, all right. Thanks for sharing with us your view as well on Dalmia Sugar. We'll wrap up our viewer queries, but we request Kunal and Sharmila both to stay on with us. We just want to take this moment to recognize the women leaders of India Inc. and how their companies, the companies that they have been helming all this while, have performed. So let's pull up those graphics as well for our viewers. First up is Vibha Padalkar, of course, the CEO of HDFC Life. If you look at the recent performance of the quarter gone by, they've seen a healthy 6% growth in their profits. Premium collection for HDFC Life was also up, came in at close to 9,500 crores. And of course, they've seen a private market share improvement. Their share now is at 27.3%. Next up is Roshni Nadar Malhotra, the chairperson of HCL Technologies. Of course, it has been a very strong quarter for them as well. They've seen a solid 3.5% sequential growth, way above estimates of the street. They signed 13 transformational deals across industry verticals and also across life sciences, healthcare, and digital. You also have, talking about healthcare, Kiran Mazumdar-Shaw, the chairperson at Biocon. Good performance there as well. They've reported revenues for the quarter gone by at close to 1,900 crores, a growth of 7% year on year. The valuation of Biocon Biologics stands at close to $4.17 billion. Their generics business has seen, however, a bit of a subdued performance in Q3. At number 4, we have Nisaba Godrej, the chairperson of Godrej Consumer. Great quarter reported by the company as well. Their revenue came in at 3,025 crores, profits at 500 crores. Margins also saw a healthy expansion of 22.9% versus 21.1%. And finally, you have the latest entrant of all of these names, Mrs. Bector's, which got listed late last year. Rajni Bector, the founder of Mrs. Bector's Cremica, profits at 86% for the quarter gone by. And of course, we'll get you some exciting excerpts from an exclusive chat we had with Mrs. Rajni Bector all through the day. So there you have it, 5 relevant stocks for today's day, especially all the companies helmed by solid female leaders. Kunal, since I have you with us right now, I just want to understand any of these stocks that you have been closely watching and tracking over the last few years, and perhaps would like to share your insights on that?
Well, so I think, Aruna, there are a lot of stocks which are looking quite attractive, and out of the 5 names which you mentioned specifically, 2 of these stocks, and rather 3 of these stocks, which I think looks extremely strong potential on charts, and I'm talking of it more from a longer term view. I think one of them is HDFC Life. I think the stock has just about gone to a different level altogether. We've seen how the liking has happened for the insurance space across, across the stocks and over the last, I think, 1.5 odd year. But I think HDFC Life has managed to be a standout performer, and I think the prices, the price patterns, the recovery, the strength in prices as well has shown that durability for HDFC Life. So of course that stands out to be one of the top stocks in the 5 which you mentioned. I think even the other names like HCL Tech, of course, looks exceptionally strong. IT stocks are, I think, in one of their best runs, which at least I have seen in the last decade. So I think in that aspect, it's very much possible that many of these IT stocks could give you stellar returns, provided someone who has a longest term kind of a time horizon. So I think even HCL Tech could be a strong outperformer, and I think Biocon has been a stock which has just trended beautifully over the last 10-12 years. And I think even at current levels, Biocon, Syngene, and such other names, they also look fairly attractive. So it's very difficult to try and pick and choose, just one of the stocks out of the 5 which you mentioned. But I think these are the 3 stocks which I do track quite closely, and I think the long-term charts for these 3 names particularly are extremely attractive.
All right, Kunal. In fact, actually, HCL Tech was something that you mentioned earlier in the show as well, I remember. Let's go across to Sharmila as well. Sharmila, you've heard the stocks that we mentioned. I'll repeat them. There's HDFC Life, HCL Tech, there's Biocon, there's Godrej Consumer, and of course, Mrs. Bector. Which of these stand out to you, and do you think that it makes sense for our viewers to consider investing in them?
So, funnily enough, kudos to all these ladies. I've recommended all these stocks, not because they are hemmed by women, but because on their own, if you look at the way the businesses are and the way growth is, they're all fantastic businesses. So, life insurance is a space that I like. So, obviously, I think HDFC Life has been a front runner in that. They have the pedigree of the HDFC name, etc. So, HDFC Life, of course. HCL Tech happens to be my favorite stock within the IT space, and the kind of steps they've taken over the last couple of years, you're really beginning to see that being borne out in the numbers now. So definitely HCL Tech. Biocon has been an absolutely inspirational story. The way Mrs. Shaw started apparently from a garage, and the way this business has grown and the vision that she's had, it's absolutely inspiring a story. Godrej Consumer again is a stock that I like because this is that typical, that Indian MNC kind of story that we've seen play out over the years. Probably the only story that stock that I have not recommended among all these is really been Bector Foods. But I think that there is great value in a stock like a Godrej Consumer and a company like a Bector, because these in today's environment, you're also trying to look for businesses that won't become obsolete. And in that sense, I think Bector Food fits that bill nicely, because you're going to continue to consume biscuits and bread no matter what. So that again, I think warrants a look. So strangely enough, as I said, out of the 5 names, 4 stocks are stocks that I have recommended many times over the last 7-8 years.
All right then. Thank you so much, Sharmila and Kunal, for joining us and sharing with us your views on a host of stocks and helping out our viewers as always. Thank you once again. Slipping into a break here. More updates and stock-related insights lined up on the other side. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now right here on ET Now. Time to focus on some stocks that are making the news this morning. First up is Adani Ports. Poonam joins us to talk about their fundraise plans. Poonam.
Well, Well, watch out for Adani Port. The board has approved fundraising of nearly around 800 crore via preferential issue, and in fact, the company is going to sell close to around 0.5% stake to Windy Investments, which is an affiliate of Warburg Pincus. If you look at the shares, they are being issued at rupees 800 per share, which is coming at a premium of close to around 7% to the closing price as on 5th of March. In fact, the transaction, of course, will be subject to shareholders' approval. However, it is noted that 0.5% equity stake is being bought. More importantly, that is coming at a premium, and also this entire transaction has to be seen in context of the acquisition of Gangavaram Port as well. Also, the transaction highlights the kind of investor confidence that is being shown in Adani Port. So watch out for this stock in today's trade.
All right, thanks Poonam for that. We mentioned this other stock in trade in the BNSN cloud today, and it's absolutely roaring. We're talking about BEML, and it is very active in trade because it is reported to have multiple suitors as part of a divestment. Avan is joining in with that story. Avan?
At least 6 companies are in the fray and looking to buy a 26% stake in the state-run defense equipment maker BEML. We understand that the likes of Tata Motors, M&M, Ashok Leyland, even names like Bharat Forge as well as Mega Engineering and Infrastructure may be submitting their expressions of interest for the government's 26% stake in the company. Now, we understand that the likes of Tata Motors, M&M as well as Ashok Leyland are looking to seek control as part of their strategy to grow the defense side of their business and cut down dependence on the core commercial vehicle business, which tends to be a bit cyclical in nature. Remember, BEML in the auto space is a major competitor in the tenders and eventually would win the companies a lot of tenders since it is state controlled, and therefore it would make more business sense for these auto majors to acquire BEML. The government, remember, owns a 54% stake in BEML. They invited expressions of interest for the stake sale on the 4th of January. You had the Department of Investment and Public Asset, or DIPAM, which had initially set March 1st as the deadline for the expression of interest or the submission of interest, but then that was later extended to the 22nd of March. And after the EOIs are received, we understand that it's SBI Capital Markets who is advising the government on the stake sale process. They will intimate the shortlisted bidders on what is going to happen in the next stage.
All right, thanks Avan for that. Defense and defense mobility particularly is a space to watch out for. We're slipping into a short break, but more on the other side, so do stay tuned. Welcome back. You're watching Buy Now, Sell Now, and we asked you on social media just a short while back the BNSN quiz for the day. The question that we asked you was, which private sector bank saw the highest deposit growth on a year-on-year basis during the third quarter of the current financial year? The options that we gave you were Axis Bank, Bandhan Bank, which is a strong focus on the rural play, on the grassroots play, ICICI Bank, that's increased its retail focus, and you have City Union Bank as well. The answer was Bandhan Bank, and 3 of you got it right. The winners and the champions of the BNSN quiz are Gupta Amarnath, Aarti Manai and Bhavya Thakkar. Congratulations to all 3 of you.
Alright, let's shift gears then. Ajayata Shah, the founder of Frontier Markets, shares a story on how she began expanding rural communities to high-end product supply chain by integrating rural women entrepreneurs. Let's listen in to her story.
Well, here Here's another very inspiring woman entrepreneur and someone who has created waves of social impact here in India. It's my pleasure to welcome Ajayita Shah of Frontier Markets on ET Now. Ajayita, thanks so much for joining us.
Thank you. Thank you so much for having me.
After the initial hiccups, Frontier Markets has really evolved and transformed into a all new role that it's having in the rural market. Tell us a little bit more about how things are being defined right now.
So Frontier Markets is a rural commerce platform, right, that influences rural markets, helping all kinds of brands access rural customers. We believe that rural India is, especially given COVID, we know that the commerce segment is predicted to be almost $309 billion by 2025, based on just consumption patterns that we're seeing in rural economies today as date. However, the challenge has been that brand companies haven't been able to properly access or influence this demand or the customer base that's there. And we believe to make that happen is through a digital assisted platform, which is run by rural women, right? Leveraging rural women's social capital, we believe that rural women can not only gather insights and data, but help rural customers make better purchasing decisions. So we envision to become India's largest platform where we can have women really driving social commerce to a huge new level. So all of our rural women who are our Sahelis, our sales force, they are all on smartphones and they're using a tool that we designed called the Meri Saheli app. And she basically has been using this tool for data collection and assisted commerce sales for her rural customers.
Tell us, the kind of segments that you touch and where really you're seeing the traction, what's really helping to grow this entire field of commerce, and how Frontier Markets also functions. I mean, is this purely charitable?
We're definitely not a charity. We definitely are keen on wanting to make money for our investors and for ourselves, but also our women. The difference is that it's a shared value approach. So what we do is we end up collecting a lot of data. From day one, we've been data obsessed. We know what rural customers are.
All right, on that note, that's all the time that we have for on BNSN. It's been a pleasure bringing you this show from Karunya and myself and everyone that put the show together. Thanks so much for joining us. There's a lot more coming up in just a short while. Happy Women's Day, and this is ET Now.